Recording. Very good morning, everyone. How are you all? Everyone fine? Okay. The last class we almost completed Ind AS 37. There's some points left. Have you done any questions by your own in which you have any doubt? Any questions? You can ask me right now. Because what happened? Whatever doubt you have, the doubt is common. Your doubt will be doubts of others. So when you are asking doubt, means you are helping others. Correct? So nothing to wait for your self-doubt. Every doubt is common. In every batch, I found that whoever is asking doubt, the doubt remains same. Okay? Now, you can carry on with your doubt. Doubt is what? Risk and uncertainties. You have not understood. Okay. So let me explain again the risk and uncertainties. Okay? This point, apart from this, any more doubt? Onerous contract. So I will revise onerous contract again. Any more doubt? Any more doubt? Now, let us revise these 2 points, risk and uncertainties and onerous contract. Okay. Now, risk and uncertainties, what I have said, whenever you are measuring provision, so that should be the best estimate, and the best estimate should be as per the management judgment, and the management judgment is based on past experience, or it can be the opinion of expert, or it can be as per the additional evidence provided by event occurring after balance sheet date. That point we'll discuss in our next chapter, that is Ind AS 10. Okay. So what Ind AS 37 want to say, that there are many risks and uncertainties which is surrounded by the event which should be considered to measure the amount of provision. Why? Because whatever expected amount you are calculating, that may be different from actual outcome. Correct? It may be possible that actually you need to pay in excess of expected present value of all outcome. Because of what? Because of risk and uncertainties associated with that particular event. And therefore some risk adjustment is required. Correct? Now, of course, our future event is uncertain. So there will be some risk and uncertainty regarding that future event. Because when you are measuring the amount of provision based on past transaction, as per past experience, so in past the outflow may be different, but in future the outflow may be somehow more than the past transaction, and therefore some risk adjustment is required. The risk adjustment can be done in 3 ways. Either of the 3 ways as per the information given the question. Means in exam you need to apply the information given the question. Correct? But you need to understand what adjustment is required. So either you can do adjustment by adding the risk to the expected present value of all future outcome. Means whatever present value you have calculated, in that you add risk, or by adjusting the estimate of future outflow, or by adding the risk to the estimated future outflow, whatever future outflow you have calculated, or you can do risk adjustment in the discount rate. So that the discount rate is known as risk adjusted discount rate. In most of the question you will find that they have given risk adjusted discount rate only. If they have given, thank you very much. Correct? Or they will give you some percentage of risk that you need to add in point number 1 or point number 2. This is the simple point from examination purpose. Have you understood this point? Correct. Okay. Now coming to the onerous contract. I said first, that Ind AS 37 is not applicable to executory contract. Now you have understood executory contract. Executory contract are those contracts which are neither performed by both the party, or it is performed by both the party to an equal extent, partially performed by both the party to an equal extent. If this is the case, it become an executory contract. So our Ind AS 37 says Ind AS 37 is not applicable to executory contract because of course it is a future event. But once it become onerous, then Ind AS 37 is applicable and we to recognize the provision for the present obligation. Now when it will become onerous, when the unavoidable cost of meeting that obligation under that contract exceed the expected benefit from it. Correct? From the information given the question, you will be easily able to understand it become an onerous contract. Last day we have taken one example that we have done one contract to buy a machinery from some company. Correct? So that become after 2 years. So that become an executory contract. But due to some reason, after 6 months, we have decided to change the production method. And if you have decided to change the production method, then can I say that machinery is no more required? Then also you are bound by that contract. Therefore, that contract become an onerous for you. In that case, you need to create a provision. The amount of provision will be equal to unavoidable cost. Unavoidable cost will be equal to lower of cost of fulfilling the contract or penalty or any compensation payable to exit from that contract, whichever is lower. Then I discussed some point about cost of fulfilling the contract. That point you have understood? Correct. In this, there was one more point. This point I have not yet done. Okay, chalega. I will explain this point at the end. Don't worry, whatever point I am not doing, that is my duty to complete it. So why I am not doing that point? There is some reason behind that. Because at this point of time, you might not be able to understand that. First, you have understood onerous contract. I'll come back to this point at the end. Correct? I think these are the 2 points which you have not understood. I have explained. Means actually you have understood. I say it every time. Just try to understand. The moment I am teaching, it is quite possible you are not able to understand. But in class, you will feel that you have understood. When you will do revision, that time you will find that yes, there are some point which was said in the class. You are not able to now recollect it. When you are not able to recollect it, then just be happy. Yes, class completed. You have understood this is one topic of this particular chapter. Be happy now. Be happy. Don't be demotivated. Okay. Once again you ask me, I will explain. Suppose the batch is completed and you have forgotten onerous contract. I am with you now. I am with you in Telegram group. By whatever mode you will call me, I'll come to you. Don't worry. Understood? Correct. So once again, I am saying that quite possible because these are all new topics. Even though you have done in CA Inter, but I know what you have done in CA Inter. Correct? So if you are not able to understand the moment I am teaching, nothing to worry. Now there was one point which I need to explain for this point number 4. One note is given for measurement. Note number 4 is given. What is given? Gain from expected sale of asset shall not be taken into account for measurement of provision. Gain from sale of asset not to be taken account for measurement of provision. Let me take an example. Now you will be able to understand about this particular example. Understood? Now, last day we have done one restructuring wala point. Restructuring again I will revise. But you have understood that whenever there is a program which changes materially the scope of business, that is restructuring. For example, sale of division. Now, whenever the entity is committed, you remember committed, the word I have used, the committed. So when 2 conditions satisfied, there is a constructive obligation. So we need to recognize provision for restructuring cost. Correct? Now just try to understand. Suppose the restructuring is sale of division. So when you will do sale of division, So there is an expected sale of asset. So when you sell the business, it means you are selling the asset. Correct now. So when you sell the asset, there will be some gain on sale of asset. So there is some expected gain on sale of asset. Now, what Ind AS 37 is saying, whether means what is the doubt? Doubt is what? Whether that expected gain on sale of asset should be considered for recognition or for measurement of provision. So Ind AS 37 says no. Ind AS 37 says no. That expected gain on sale of asset has nothing to do with the measurement of provision. Provision only means the expected expenditure due to contingencies existing on the reporting date. So if there is some expected sale of asset, the gain on sale of asset should not be considered for measurement of provision. Understood? Very important point, can be asked in multiple choice question, MCQs. Important for MCQs. So gain from expected sale of asset shall not be taken into account for measurement of provision. Have you understood this point? Correct? No question has been given for this particular point in ICI study material. But now if some question is created, you can answer it once you have understood. But you need to retain this point. For retention, what is required? Revision is required. For revision, what is required? Classes should be completed. Classes can be completed when you are consistent. Consistency comes from discipline. Correct? This I will explain, I will inform you every day. Okay? Chalo. Now coming to the last point, what we have done in the last class. Coming to restructuring. Restructuring, have you understood? We have not taken any question, meaning to you have understood. Meaning you have understood? The sale of division, shifting of location, termination of a particular location, or relocation of one business to another, one location to another location, means shifting of location. These are some examples of restructuring. So of course, whenever there is a restructuring, there will be some restructuring cost. So we are here to understand, should we create a provision for restructuring cost, and if you want to create, when to create. So we need to recognize provision for restructuring cost when there is a constructive obligation, and the constructive obligation arises when the entity is committed, and when the entity is committed when two conditions are satisfied. Remember, first, entity has made a detailed formal plan for restructuring. Entity has made a detailed formal plan for restructuring. I said in exam always this point will be deemed to be satisfied even though not given. Correct? Now suppose they have said the entity has decided, so it means even though not given, we will assume that detailed formal plan has been made. Correct? So second condition is more important. The first condition is what? Entity has detailed formal plan for restructuring. Second condition, entity has started to implement such plan, means has done some activities to implement that particular plan. Correct? Or has made announcement of the main features of plan to those who are affected by such plan. It means entity is committed. It means there is a constructive obligation for restructuring. Therefore, on reporting date, we should recognize provision if all the three conditions are satisfied. All the three conditions, you know. Got this point? Yes, sir. Now, for measurement of provision, what should be considered? What should not be considered? In simple word, we should consider only those expenditure which are directly related to restructuring, means which will be incurred only because of restructuring. Means in simple word, it should be incremental cost. Means any expenditure which relate to the ongoing activities of the entities. Any expenditure which are related to ongoing activities of the entities are not because of restructuring. Therefore, that should not be considered. Got this point? Correct. So from the question, you will be able to understand what are the expenditure which are related to the ongoing activities of the entity and which are related to what? Restructuring, directly related. Correct. So only the direct expenditure arising from restructuring, which are those that are both necessary entailed by the restructuring and not associated with the ongoing activities of the entities. The best example I will say from examination point of view, they will always ask this. Example, I have already given what? Termination cost. termination cost, means employee termination cost. Better write down employee termination cost. Employee termination cost. Correct. Then it will not include the following expenditure. It will not include, means provision amount will not include. What it will not include? Retraining or relocating the continuing staff. Just try to training expenses or relocation expense of one staff from one department to another department. One department to another department. Can you see it depends upon the future conduct of business? Whether employee want to relocate or not, whether training is required or not, it depends upon future conduct of business. Therefore, for this, no provision is required. Similarly, any marketing expenditure, similarly, any expenditure on new system, that will not be considered for measurement of provision. Why? Because this all depends upon the future conduct of business. Correct. And it will also miss for any future operating loss up to the date of restructuring, that should not be also considered for the provisional amount, because for future operating loss we don't recognize any provision unless the contract become onerous. If the contract become onerous, then we should recognize what? Provision for that. This much we have done in the last class. Let me take one very good question which has been given in ICS study material and till now not asked. So I will say expected, super expected. Suddenly this question will be asked in exam for 6 marks. Correct. Write down super expected and write down MRQ, must revise question. Must revise question. On 1st Jan 2002, the directors of Johansson Limited decided to terminate production at one of the company's division. Terminate production means restructuring. Question is of restructuring. Means abhi to right now you will be able to understand this is a question of restructuring. Exam you need to understand. Yes, it is a question of this chapter. In this chapter is a question of restructuring. Okay. The decision was publicly announced. You can see publicly announced. What is not given? Nothing has been given about detailed formal plan. But that is deemed to be satisfied. Announcement will always be after what? Detailed formal plan. If announcement has been done, it means there is what? Detailed formal plan. So the decision was publicly announced on 31st Jan 2002. The activities of division were gradually reduced from 1st April 2002 and closure is expected to be completed by 30th September 2002. You only say you recognize provision on which date? You recognize provision on which date? I am giving you 3 options: 31st Jan, 1st April or 30th September. 31st Jan, 1st April or 30th September. 31st Jan. Are bolo yes or no? Everyone is wrong. It is on 31st March. 31st March 2002. Correct? This chapter is applicable on which date? On reporting date. Dekho, done, wrong, done. Mistake 1 means in exam MCQ question can be of this type. You will say nothing has been given about 31st March and you will not choose that option, and maja aayega. Maja aayega. When maja aayega? At the time of result. So you need to apply the concept. Already I have said on reporting date. I started with from reporting date. Contingencies are situation or any condition existing on reporting date, balance sheet date. Correct na? Yes sir. At 31st Jan 2002, the directors prepare the following estimate of the financial assumption of the closure. Okay sir. Redundancy costs were initially estimated at 2 million. What do you mean by redundancy cost? It is nothing but termination expenses. Redundancy means the number of employees has been reduced. So that is known as redundancy cost. So just write down this is nothing but employee termination cost. Initially estimated at what amount? 2 million. Further expenditure of rupees 8 lakh will be necessary to retrain employee who will be affected by the closure but remain with the Johansson Limited in different divisions. So retraining expense. Correct. This retraining will begin in early July 2002. Let us estimate are the redundancy cost will be 1.9 million with retraining cost of 8,50,000. Now you only say let us estimate means will be as on which date? Let us estimate will be as on which date? They have not given date. 31st March. Emotions of the questions. Means you need to understand the emotions of the question. Can I say we always try to understand the emotions of other party? Correct now? We need to understand the emotions of other party. Then only relationship will be created. So if you want to create a relationship with the subject, you need to understand the emotions of that particular subject. So let us estimate. It means what? As on 31st March, you only say which amount is more relevant, 2 million or 1.9 million? 1.9 million. But just try to understand. Those who are not able to understand the emotions, they will take what? 2 million. Got this fine? Have you understood? Yes, sir. So you only say first question is important or concept is important? No, first question. Understanding the question. If you do not understand the emotions of question, can you apply concept? Can you apply concept? No. So you need to first understand the information given in the question, then apply concept, and then draft solution, then writing skills. Then your writing skills. Chalega? Yes, sir. Now in this there are two expenditure they have given. First is redundancy cost and second is what? Retraining expenses. You only say provisions should be recognized for both or it should be recognized only for redundancy cost or only for retraining cost. Very good. So can you see you have understood that for retraining cost already we have done this point because retraining expense depends upon the future conduct of business. For that will not do any measurement of provision. Got this point? Correct. So this is concept. This is concept now. This is concept. You have understood the information given the question. Now you are applying concept. Now you are applying concept. So once you have understood this, so can you say this is not at all important? This is not at all important. Only what is important? Redundancy cost is important. Okay. Then plant and equipment having an expected carrying amount of 31st March 2002 of rupees 8 million will have a recoverable amount of 1.5 million. Abhi we have not done impairment of the asset. Impairment of the asset. Impairment loss. I explained impairment loss in the last class. You only say whether impairment loss is covered in this chapter. No, it is not covered in the chapter. It is covered in Ind AS 36 coming soon in your life. Correct. But can I say if there is any plant and equipment, so in there, if there is any plant and equipment and some information about impairment loss is given, so we need to apply Ind AS 36 also. That Ind AS till now we have not done, but at your exam time you have already done that Ind AS. So this is as per, just write down as per Ind AS 36. As per Ind AS 36. Now what Ind AS 36 says that if the recoverable amount is given how much? How much recoverable amount? 1.5 million is less than carrying amount. Carrying amount is how much? 8 million. The difference is impairment loss, and that impairment loss will be charged to profit and loss account immediately. Correct? So 8 million minus 1.5 million is how much? 6.5 million. So okay, this 6.5 million will be recognized as an impairment loss and charged to PL immediately. So this point number 2 is based on Ind AS 36, not as per Ind AS 37. Chalega? Can we move? Can we move? Yes, sir. The division is under a contract to supply goods to a customer for a next 3 years at a predetermined price. Under a contract to supply. But this is which contract? This is which contract? Executory contract. This become an executory contract. Okay, sir. It will be necessary to pay compensation of 6 lakh to this customer. The compensation actually paid on 31st May 2002 was 5,50,000. Correct? So can you say this become an onerous contract and the compensation payable need to be also recognized? Actual compensation how much paid? 5,50,000. 5,50,000. Understood? And what was the estimated amount? Estimated amount is 6 lakh. Now we need to also think about approval date. Approval date means suppose approval date is after 31st May. If suppose approval date of approval no, Ind AS 10 AS 4 coming soon. So if suppose your date of approval is after 31st May, तो बताओ your provision should be based on 6 lakh or 5 lakh 50,000. Provision should be based on 6 lakh or 5 lakh 50,000. Not able to understand? Chalo, I will explain this one because I think you have forgotten AS4. Correct? Understood? But can you see this might be linked with AS4 or Ind AS 10 coming soon? Ind AS 10 coming soon. Okay, very good question. I like this question personally. Means super question. And whenever I will say very good question, that type of question till now not asked in exam. When I will say a very good question, that type of question till now not asked in exam. When I say simple question that have been asked in exam. It means whenever you want to do simple question, go to what exam question. Okay. The division will be making an operating loss of 3 lakh per month in the first 3 months. First 3 months means which 3 months? First 3 months means which 3 months? So which 3 months? No, Ray. Your announcement was on 31st Jan 2002. So this was the date of restructuring. This was the date of restructuring. When you are committed on this date. The first 3 months is what? 31st Jan. It is 31st Jan. It is what? Bata? It can be after 31st Jan. After 31st Jan. Okay, sir. Acha, first 3 months, I have not read the entire question, of 2002 2003. Of 2002 2003. So of 2002 2003, I have not read it properly. So 2002 2003, first 3 months will be what? It is per month in the first 3 months of 2002. It is April, May, June only. April, May, June. And 2 lakh per month in the next 3 months of 2002 2003. Okay. Okay. This estimate proved accurate for April and May. And for April and May, this was accurate. Got this point? Having missed for April and May, it was accurate. Means whatever you have estimated that become actual. Whatever you have estimated that become actual. Now you only say for any future operating loss, whether you recognize any provision, so this become future operating loss. If it become future operating loss, no provision is required. No provision is required. Understood? So this point is also bakwas. Yes, sir. Now division operate from a leasehold premises. Leasehold premises means lease. Lease means Ind AS 116. Lease means Ind AS 116. Correct? Lease means Ind AS 116. Now for point number 5, I am not happy with the solution. I am not happy with the solution means from my point of view, whatever solution is given, that is not correct. That is not correct. There is some reason behind that. I will explain that reason right now. But first, let me read the question. Because if I will not read the question, you will not try to understand that, because already I have said I am not happy with the solution. Correct? Okay. So the division operate from a leasehold premises. Okay. The lease is a non-cancelable operating lease with an unexpired term of 5 years from 31st March 2002. Means from this particular sentence, just try to understand what do you think? What do you think? This company, Johansson Limited, is a lessee or lessor? Is a lessee or lessor? Is a lessee? Is a lessee. Correct. Now let us come to some concept. What actually happened? Initially, there was Ind AS 17, which was actually equal to AS 19. You have done AS 19 in Bachpan? Lease. AS 19, you remember or not? Lease. Then it was this Ind AS was deleted and Ind AS 116 was introduced. Means now it has been deleted. Ind AS 17 is deleted now. Now what exists? Ind AS 116 exists. Okay. Now, as per Ind AS 17 and as per AS 19, because both were approximately same. Okay. So, as per these, there are two party lessee and lesser, lessee and lesser. Okay. And for lessee, there will be what? Operating lease and finance lease. Correct. And for lesser, there will be a operating lease and finance lease. This only you have done in AS 19. Now, as per operating lease, we'll do accounting treatment. As per finance lease, we'll do accounting treatment. Remember this? Do you remember this? Yes, sir. Correct. Correct. Yes, sir. Now, Ind AS 116 says what? Let us understand. Now, this is applicable now. Now, this is not applicable. So now Ind AS 116 is applicable. Now Ind AS 70 is not applicable. What Ind AS 116 says that there are two party lessee and lesser, lessee and lesser. But in the books of lessee, will not do any classification. No classification means now there is no concept of what? There is no concept of operating lease and finance. There is only lease. Means in the books of lessee now there is no operating lease, no finance lease. There is only lease. But in the books of lessor we have what? Operating lease and finance lease. Why? I will explain when I will do Ind AS 116. Correct. Are you able to understand what I am saying? It is as simple as why, but why they have said no classification. Just try to understand what they want to say. Suppose this is the calculator. I am the owner and I want to give it to you on lease. So you will become lessee, I will become lesser. Now suppose this asset I have given to you for 1 month. 1 month that you can use it. But who is deriving benefit from this calculator for 1 month? You. And this calculator is under whose control for 1 month? You. So it means, can you say for 1 month it is your asset? Even though it might be an operating lease. And therefore there is no concept of operating lease in the books of what? Lessee. Because for 1 month you are controlling it. You are deriving benefit from it. You are controlling it and you are deriving entire benefit from this calculator for 1 month. What is the meaning of asset? What is the meaning of asset? What is the meaning of asset? We have done the meaning of liability. So what is the meaning of asset? Economic benefit. And only economic benefit. It is under control. Very good. Means an asset is a resource which is controlled by the entity and which gives future economic benefit to the entity. If these two conditions satisfied, this resource will become the asset. Now just try to understand, if I have given this calculator to you for 1 month, for 1 month it is under whose control? For 1 month, who is deriving entire economic benefit? It means it is your asset or not, as per definition. Therefore, for you there is no concept of operating lease, because if you remember, as per AS 19, in case of operating lease for the books of lessee, we don't used to recognize the asset in the books of lessee. But for 1 month also it become your asset. Therefore, what Ind AS 116 says that we will recognize an asset in the books of what? Asset in the books of what? Lessee. And a corresponding liability, because some amount is payable. Some amount is payable. So corresponding liability, lease liability. This journal entry will be done. This journal entry will be done. And this asset is known as ROU asset, a new term in your life. ROU. ROU means right of use asset. Right of use asset. You write on ROU right now. You can write down that this ROU means what? Right of use asset. Correct. So what is the journal entry in the books of lessee? ROU asset account debit to lease liability. Only this much. this much. Having so now Ind AS 116 is applicable. Now so this is not applicable only. And from the question what is given, just try to understand. They are saying the lease is a non-cancelable operating lease. And the question is only not correct. Because in the books of lessee, there is no operating lease. In the understood. Are you able to understand? What actually happened, I will say. What actually happened? Before 116, a similar question. You can see this question was given in RTP November 2023. RTP November 2023 means after 116. Correct. But before, I'm just explaining the background of this question. I'm explaining the background of this question, why this question came, how this question came. There is one similar question. There is one similar question. This is the similar question. 17 is similar question. Similar question. Understood? You can see this again was, this question was drafted initially when there was before and after. Before 116, question number 17 was drafted. And after Ind AS 116, question number, which question we are doing right now? 32. So 32 was drafted. Okay? Understood. Now when this question was drafted, so there was no Ind AS 116. That time the question was correct. Are you able to understand? Because that time Ind AS 17 was there, na? But what they have done, they have copied paste this question here without changing the question. This normally happens when the person who is creating the question is actually has no knowledge about Ind AS. He is copy pasting the question. Are nalayak? You don't know anything. We can see this only in classroom, not in exam hall. In exam hall, if same question come, now if same question come, can you write down you don't know anything? So you need to understand what need to be done from examination point of view. So for that, I am important. Only for that reason. First, have you understood the question is only wrong? Now the point is that because same question has been given now after Ind AS 116 and same questions comes in exam, what need to be done? Because you can't challenge any question. You can't say question is wrong. You can't say question is wrong. You don't have that much right. And you can't give any negative comment in the exam. Are you able to understand? First, have you understood the question is only wrong? Bolna rahi? Yes, sir. Understood. Chalega. Now, can I read? Can I read? Okay. So just write down somewhere. Now there is no concept. Now there is no operating lease and finance lease in the books of lessee as per what? Ind AS 116. As per Ind AS 116. Okay. Now what they have given? The annual lease rental payable on 31st March in arrear are 1.5 million. Means this was the annual rental payable at the end of each year. Correct? Understood? The landlord is not prepared to discuss any early termination payment. The landlord is not prepared to discuss any early termination payment. Means they don't want to terminate the lease. So can you say this contract become an onerous now? Why this contract become onerous? Why this contract become onerous? Because can you say we have decided to close down the production. We don't require this building. And if the landlord, means if the lessor do not terminate the lease contract, we need to pay rent even though there is no protection. The expected cost is more than expected benefit. It become onerous or not? So it become onerous. So now contract become onerous. Contract become onerous. Understood? Following the closure of division, it is estimated that Johnson Limited would be able to sublet the property from 1st October 2002, and now they will be able to sublet it. Means there is some recovery, there is some payment, and if they will sublet it, there will be some recovery. Correct now? Are you able to understand what I am saying? Yes, sir. Johnson Limited could expect to receive a rental of 3 lakh for the first 6 month period from 1st October 2002 to 31st March 2003, and then annual rental of 5 lakh for each period ending 31st March 2004 to 31st March 2007. Why? Because the lease contract was for how many years? Remaining 5 years. Remaining 5 years. Understood? What actually happening? Means this is what? 31st March 2002 starting. Right now we are standing यहाँ पर 31st March 2002. Correct? So this become Y0. This is Y1, this is Y2, this is Y3, this is Y4, this is Y5. Correct? So this is the unexpired lease term. Correct? Can you say lease payment will be, what is the lease payment? Lease rental payable at the end of each year, 1.5 million. 1.5 million. So 1.5 million, 1.5 million, 1.5 million, 1.5 million, 1.5 million payable at the end of each year, and lease receivable because of subletting, receivable, subletting. So how much receivable first year? Only for 6 months, because it was sublet on this date for the last 6 months. What is the amount receivable? 3 lakh. ठीक है, 3 lakh means can I say 3 lakh means 0 point how much million? 0.3 million. So it will be 0.3 million यहाँ पर, and then 0.5, 0.5, 0.5, 0.5. Understood? Understood? Correct? Are you able to understand? Now what they have given? Let's see. Any discounting calculation should be performed using the discount rate of 5% per annum. Because can you say we need to find out present value? Present value, this is future amount. You are given the following data for discounting at 5% per annum. Present value of rupee 1 received at the end of year 1 is 0.95. 0.95. It is given 0.95. So for this they have given 0.95. 0.95. Correct. Then they have given what? Present value of rupee 1 received at the end of year 1 to inclusive. So 1.86 is actually annuity factor or present value factor? It is annuity factor, means it is including 0.95. So you can minus it if you want to minus kar. How much? 0. So this is 0.91. Can you give me minus then again? Now this minus this, this minus this, this minus this. Can you give? Because everything is given inclusive only. Can you give me minus? 0.86, 0.82, 0.78. Can you say you will find out the present value of net amount? So net amount is 1.211 1, 1. Can you give me the present value? One point 14, then 0.991, then 0.86, 0.82, 0.78. What is the total? 4.51. And this should be the provision amount. So we should create a provision for onerous contract. Provision for onerous contract. Yes or no? Calculation easy. It seems easy because I am with you. Huh? I am with you. Understood? Correct. Are you able to understand? Calculation, have you understood? I'll come back to this point again. First, I will explain the solution as per ICA solution. Have you understood this calculation part? In exam, you can do it, but you need to read the question carefully. Thoda idhar udhar, one mistake, 0 marks. Okay, sir. Understood. Now, this also you have understood. Compute the amount that will be included in SOPL for the year ended 31st March 2002 in respect of decision to close down the division of Johnson Limited. So you can see they have written as per Ind AS 37. Closure of division is a restructuring exercise. Ind AS 37 state that constructive obligation to proceed with the restructuring arises when at the reporting date entity has that two particular point, that entity has made detailed form of plan and entity has announced the main feature plan to the person who is affected by it. That two condition you should write down. That two condition you can write down. Correct. Then this will result in the following charges to SOPL. First, batao, how much provision should be created for redundancy cost? 1.9. The estimate of redundancy cost of 1.9 million is the best estimate of the expenditure at the date of financial statement are authorized for the issue. Achha, they have given date of authorized. They have not given date of authorized now. They have not given date of authorized. Now, whenever date of authorized is not given, it will be our general assumption that whatever information has been given, that is before approval date. Means can I say here from my point of view question is thoda sa not proper. They have given one, chalo I will come to that point. So of course can I say 31st March, this estimate was before approval of financial statement only and therefore we will take this. So this you have understood. Any provision is created for retraining cost? No. So no charge is necessary for retraining costs as these are not incurred in 2001-2002 and cannot form part of restructuring provision as they are related to ongoing activities of the entities, or you can say these are dependent on future conduct of business. Write down as it depends on future conduct of entity. चलेगा? Now point number 2, तो already I have explained about impairment loss. Impairment loss of how much will be created? 6.5 million. That will be also charged to PL account. This will be as per the requirement of Ind AS 36 because they have also mentioned Ind AS 36. Correct? Understood. Then for compensation, there was one contract. For that they need to pay one compensation. We need to create a provision of actual payment to here they have assumed. Means information has not been given. So here they have assumed this payment is done before approval of financial statement. This payment has been done before approval of financial statement. That assumption they have taken by their own. So they have assumed that payment has been done before approval of financial statement. Got this point? No information has been given. So can you say if the actual payment has been done before approval of financial statement, this provide evidence of the condition existing on the balance sheet date, and therefore we should recognize provision not as per the estimated amount but as per actual amount. If you have not understood this, I will explain this point under Ind AS 10 coming soon. Understood this point? but any information which is coming before approval of financial statement that provide evidence of the condition existing on the balance sheet date, and therefore that should be considered, and that is only adjusting event. So therefore they have created provision not of 6 lakh, they have created provision of 5.5 lakh, but they have taken assumption the actual payment has been done before approval of financial statement. What they have done, check karo. For compensation for breach of contract 0.55 million, same principle apply here as apply to redundancy cost, but write down it has been assumed payment has been made before approval of financial statement. Got this point? Yes, sir. Then they have said for future operating loss, no provision is required. Already we have understood. Then Ind AS, that is last point for that lease wala. Ind AS 37 stated an onerous contract is one for which expected cost of fulfilling the contract exceed the expected benefit from the contract. Provision is made for the lower of expected net cost of fulfilling the contract and the cost of early termination not available. Cost of early termination is penalty. Penalty is not given. Means if you terminate, you need to pay some penalty. The penalty amount is not given, so you need to only find out cost of fulfilling the contract and lower you will take. The penalty is not given now. We ignore that. Ignore that. And how much amount we calculated? 4.51. They have also calculated 4.51. Thank you very much. So we will create provision for this amount. The net cost of fulfilling the contract is 4.51. What they have done? They have done the calculation in this way. Ki 1.2 into 0.95. We can do in this way. Plus, can you see, we can say 1 into some factor of this. Some factor of this is what? How much? 3 point, this last 4 3.37. Same answer will come or not? Same answer will come or not? 4.51. Same answer will come. Correct now. So they have done calculation in that way. You can see they have done that way of calculation. Or they have done some other way. They have done 1.5 first calculated separately, and then they have done minus what? Present value of recovery. Present value of recovery. They have done in some other way. You can do in that way. Mathematics can be done in many ways. That is your choice now. How you are doing the mathematics. They have done what? 1.5 million. For 1.5 million, they have taken the in some factor of this, because this is common now. So what was the annuity factor for 5 years? Annuity factor for 5 years was 4.32. So they have taken 4.32. Then minus what was 0.3 into what? 1.2. Then plus 1. Sorry. What was the next? 0.5 na? 0.5 multiplied by 3.37. In this also the answer will come same. Means this is the payment, this is the recovery. Answer will come same or not? So it is your choice. You want to do calculation this way. I will say this is the best way to understand. It will take throughout the time, but you will never do mistake. Okay. Now, have you understood solution? Solution you have understood? Solution. Now just try to understand. Just try to understand. Question number 32. What was the last point? What is the last point? Last point was what? Point number? So I am explaining point number 5. As per Ind AS 116, there is no concept of classification of lease in the books of classification of lease as operating lease and finance lease in the books of lessee. In the books of lessee. Understood? Correct? Understood? In the books of lessee, already a lease liability will be recognized at present value of all lease payment. Present value of all lease payment. Correct? It means lease liability as on 31st March 2002 will be equal to 1.5 multiplied by, what was the annuity factor? 4.32 na? 4.32. How much? 6.48. 6.48. Correct. Now you only say, if as per Ind AS 116 already a liability is coming, will you recognize provision again? No. Solution is not correct. The solution is given as per Ind AS 17. Means solution is not correct. They have copied paste solution of previous question which was based on Ind AS 17. Not what to follow. From my point of view, same question come, follow ICR solution. Just write down. Just write down here. Refer means solution is not correct. Explanation I have given in class note. Refer class note. Because follow ICA solution. Follow ICA solution. Means here you will follow ICA solution. You will not follow the concept if you want to get marks. So why you are explaining this much? Why you are explaining this much? Don't explain, sir. If you want to follow IC solution, just try to understand. Right now you don't know Ind AS 116. But can you say when you will do revision, you know Ind AS 116. That time so you will apply your own concept now. That time you think there is no operating lease. Already a lease liability is coming. Then why you are creating provision? The doubt will come or not. So to cover that doubt and to save your time, I have written this. His solution is not correct. Because when you will do revision, that time the Ind AS 116 is completed or not. That time you will not ask me doubt, so this solution is not correct. So that time you will waste your time, your half an hour will be wasted because of this one para. So I want to save that half an hour and that panic. You will be in a panic situation, what to do, what not to do. So I have written follow ICO solution. If the same question is coming, same question. If there is some correction, don't worry, I will be the person who will inform you that there is some correction in this particular solution. Okay, sir. चलेगा सर. बोलो. One question have taken how many hours? Almost 1 hour. almost means 40-45 minutes taken. Understood? Got this point? So I will explain you what to do, what not to do from examination point of view also. Nothing to worry. But you need to revise from class notes. That is more important. Have you understood this? And already I have a must revise question before exam. Okay, so question was good, but question was good. Chalega. So restructuring you have understood? Huh? Which solution? Yeah. What? 37. I don't know. It is correct, na? What is the sum total of this 0.91, 0.86, 0.82, 0.78? 3.37. You only calculate, na? Okay. Now, okay. Or you can do in this way, your choice. All will, the same answer will come. Okay, sir. Now done? Chalo. Now let us complete the chapter. Now coming to scope. This chapter, scope means what? What is covered, what is not covered in this chapter. So can I say, they will always say what is not covered. So balance are covered. So what is not covered, not applicable to executory contract unless now you have understood. It is not applicable to executory contract unless it is onerous. It is also not applicable to financial instrument. So financial instrument is a new term for you. However, I will say example, if you want to write an example, it is not applicable to receivable. You know receivable, debtor? Because now already I have explained that any impairment loss on debtor will be covered in some other chapter. Okay, so receivable, or you can say investment. Just write down, you will be able to understand when this particular chapter will be covered. It is also not applicable to employee benefit. Now for employee also we recognize many provisions. For example, provision for gratuity, etc. So that provision for gratuity will be covered under Ind AS 19 because we have a specific Ind AS on that. It is also not applicable to income tax. Now income tax, I hope you know about current tax, deferred tax. So that is all covered under Ind AS 12. So income tax liability is not covered in this chapter. It is also not covered in for any obligation under insurance contract. Just make one correction. Now Ind AS 104 has been deleted. Now it become Ind AS 117, but this is not in syllabus. This is not in our syllabus. Not in syllabus. So any obligation under insurance contract for insurance company is not covered in this chapter. Okay. Any contingent consideration arising in case of business combination. So for business combination, all points are covered under Ind AS 103. So any contingent consideration arising in case of business combination will not be covered in this chapter. We'll discuss this point under Ind AS 103. Chalega. It is when respective Ind AS will be covered, automatically you will understand that point is covered in that chapter. There is no need to memorize it. You will automatically understand, and it is quite possible this particular point is scoped out. Till now, they have not asked, but can be asked in multiple choice question. What is covered, what is not covered under Ind AS 37. Okay. Then coming to disclosure requirement for each class of provision. The disclosure need to be given class wise. Correct. A brief description of the nature of obligation. What is the nature of obligation? A brief description. An indication of uncertainties about the amount of timing of those outflow, amount or timing of those outflow. Correct. The indication of uncertainties about the amount or timing of those outflow. If there is some uncertainties, the amount of any expected reimbursement stated the amount of any asset that has been recognized for the expected reimbursement. Reimbursement topic we have understood. The reimbursement can be either recognized or require disclosure. Correct. Then for each class of contingent liability, a brief description of the nature of contingent liability. Nature of contingent liability. Where practicable, if you can measure it, practicable. An estimate of its financial effect. I have already said that contingent liability need to disclose whether it can be measured, it cannot be measured. An indication of uncertainties relating to the amount or timing of an outflow and the possibility of any reimbursement. If there is some reimbursement possibility, that also require disclosure. Okay. For each class of contingent asset, a brief description of nature of contingent asset, an estimate of financial effect where practicable. I said Ind AS 37 is silent about measurement of contingent asset, but in exam they will never ask you about the measurement of contingent asset. But practically we measure the amount of contingent asset as we have done the measurement of provision and contingent liability. Chalega? Correct. Now they have given one note where any of the above information required is not disclosed because it is not practicable to do so. Means if we are not able to measure the amount, then facts will be disclosed that we are not able to measure the amount. This fact require disclosure. The fact shall be stated. The fact shall be stated. Understood? Okay. Now difference between Ind AS 37 and AS 29. Whether this difference is a part of syllabus. As per study matrix, yes, they have given the content, but no, they will never ask question on difference. So, recall not in syllabus. Not in syllabus. Means if you want to cut. But can I say as per interview is concerned, as per general knowledge you should know. Because you may have both client, AS client and Ind AS client, so that difference you should know. So for your practical understanding, I have given this point. Chalega? So already I have explained many things. Constructive obligation, AS 29 is silent, but Ind AS 37 deals with constructive obligation. Already I have said. As per AS 29, discounting is not permissible. We recognize provision at undiscounted amount, but as per Ind AS 37, allowed if the time value of money is material. If the time value of money is material, already we discussed. Then for contingent asset, our AS 29 used to say disclose in the report of approving authority, but Ind AS 37 say disclose in the notes to account. This become one difference. Last, onerous contract. Onerous contract. Now what Ind AS 37 says, whenever there is an onerous contract, so there may be some asset which require impairment. Just try to listen what I am saying. Suppose there is one contract and that contract has some dedicated asset. Dedicated asset means suppose you are using some property, plant and equipment for that particular year for fulfilling that contract. Correct? So for that property, plant and equipment, there may be some impairment loss. Impairment loss is as per Ind AS 36. So what Ind AS 37 has given one clarification that before recognizing any provision for onerous contract, first calculate what? Impairment loss. And balance amount will what? Provision for onerous contract. Balance amount will be provision for onerous contract. Correct? So what they have said, it requires recognition of impairment loss on the asset dedicated to such contract before any provision is created as per Ind AS 37. And impairment loss will be calculated as per Ind AS 36. Coming soon? Coming soon na? Understood? Correct. However, AS 29 was totally silent about this point. AS 29 only deals about onerous, but this para was missing under AS 29. Correct. So what they are saying, it requires recognition of impairment loss on the asset dedicated to such contract before creating any provision for onerous contract. This point is given here. This point I have not read initially. Come to onerous contract. Last point. Before a separate provision for an onerous contract is established, entity recognize any impairment loss that has occurred on an asset dedicated to that contract. Understood this point? Just write down. This point may be important for multiple choice question. may be important for multiple choice question. Chapter is over. I'll take one more last question. One more question can I take? Balance. This question 33, I like personally. Let's see how you are reacting. An entity has a contract to purchase 1 million unit of gas at 23 paise per unit. So they have a contract to purchase 1 million unit of gas, giving a contract price of 2,30,000. What was the contract price? 2,30,000. Correct. So 23 paise, 1 million is 2,30,000 only. The current market price for similar contract is 16 paise per unit, giving a price of rupees 1,60,000. All of the gas purchased by the entity is used to generate electricity using dedicated asset. Determine in the following situation whether the contract is onerous and provision to be made when the electricity is sold at a profit. Means even though they purchase at 23 paise, right now the price is 16 paise, but they can sold the gas at a profit. The electricity is sold to a wide range of customers. But whether it is an onerous contract. Means they have done one contract at 23 paise. Now the price drop, it becomes 16 paise. Are in the like? Understood na? Means you have done one contract with someone that I will purchase the electricity at 23 paise. But right now it is available in the market at 16 paise. So sometime you have already done one contract, but you can sell that gas at a profit. Means there is no loss. So whether it is an onerous contract. Yes, yeah, no, yeah. Why you are thinking so much? What is the meaning of onerous contract? The unavoidable cost is more than expected benefit. But here, the profit is there. It means what? Your expense is less than income. It is not an onerous contract. Simple na. If you can sell your electricity at a profit, it is not a onerous contract. What is given? The gas will be used to generate electricity, correct, which will be sold at a profit. The economic benefit from the contract include the benefit to the entity of using the gas in the business, and because the electricity will be sold at a profit, the contract is not onerous. Okay, sir. Second, the electricity is sold at a loss and the entity make an overall operating loss. The electricity is sold to a wide range of customers. Badao. What to do? Whether it is an onerous contract, whether now it is an onerous contract. No. Future operating loss will not recognize unless the contract is onerous. Onerous contract, then to you need to recognize the loss na. It become onerous. Onerous is a special point. Onerous become a special point. Correct na? Once it become onerous, Ind AS 37 is applicable. Correct? Now you are linking two different points. I have taught future operating loss separately. Then after that I have explained onerous contract. Once the contract become onerous, you have to recognize your loss. Yes or no? So yes, in this case. But can you see in this case, first you need to recognize impairment loss for the dedicated asset. The last point, whatever we have done. Last point, whatever we have done, what they have given. The electricity is sold to a wide range of customers. The entity first consider whether the asset used to generate electricity are impaired. To the extent that there is still a loss after the asset has been written down, a provision for onerous contract should be recorded. Means first recognize impairment loss and balance loss will be recognized as a provision for onerous contract. Provision for onerous contract. Chalega? Yes or no? Last, what they have given. The entity sells the gas under contract which it no longer need to a third party for 18 paise. Means it can sell the electricity at what amount? 18 paise. They purchase the what? 23 paise. Loss of 5 paise into 1 lakh. So what is the total loss? What was the total unit they have purchased? 1 million na? Sorry, 10 lakh. 10 lakh into 5 paise how much? 50,000, okay, per unit. The entity determined that it would have to pay 55,000 to exit the purchase contract, means they can pay penalty to cancel the contract. So what is the loss? 50,000. What is the penalty? 55,000. Whichever is lower, they'll create a provision for 50,000. That is only given. Correct now. So therefore the provision should be made for the onerous contract of 50,000 being the loss of cost of fulfilling the contract and penalty cost for the cancellation. But this type of question, whether in MCQs or descriptive, easy or difficult? Easy, but if you will not read, you will not revise, the same question is difficult. The question paper is not difficult. We don't revise, yeah, we don't retain the concept. I will say this question if they are asking exam, even though you have not done, it is easy or not, even though you have not done this question, concept you know, you can do it. Am I right or not? Yes, sir. So from my point of view, I have done most of the question which is required. Now some question you do it by rote. If I will do all the question, then there is no benefit. Benefit will come only when you are doing and you are able to understand, yes, we have understood the chapter. So from my point of view, chapter is closed. Any doubt you can ask me at any point of time. At any point of time. Okay, sir. चलेगा? Let us do question 21. I am just giving some question. Means some question I will do, give you. I will to do all the questions. But some question if I am doing that you mandatory do. ठीक है ना? Question number 21. Question number 19. Question number 18. Question number 15. This much question you do by your own. Okay? Chalo. We'll take a small break because after break we'll start a new chapter. Okay? Small break. Early break today. Okay? लो चलो now can we start once again everyone? So before break we have completed Ind AS 37. Okay, now we'll start a new chapter, Ind AS 10, that is event after reporting date. Event after reporting date. Corresponding AS is what? AS4. What was the title of AS4? Title was contingencies and event occurring after balance sheet date. So now there is no Ind AS for contingencies because it is not required. Because the contingencies, some part is covered under Ind AS 37 and some part which is related to impairment loss is covered in some respective Ind AS. Got this point? So only it is event after reporting date. Now it is very simple chapter. I know that you all know about event occurring after balance sheet date. Only I will say a type of revision is required. Correct? But then also I know what you know. So even though you know, I need to do it from the base. Chalega? So if I am saying even after reporting date, so this is a financial year and this become reporting date. This is the reporting date. So this become event occurring after reporting date. But up to what? Up to the date of approval of financial statement. Up to the date of approval of financial statement. So this particular event is covered in this chapter. These events are covered in this chapter, correct? So this become event occurring after reporting date. Got this point? Have you understood this point? Correct. Chalega? Means can I say any event which occur after the approval of financial statement? Any event which occur after the approval of financial statement may also provide some condition existing on balance sheet date. It may also provide some condition on existing on balance sheet date, but this is not covered under Ind AS 10. This is the understood point. But one doubt will come. So why only this event? If you are saying any event which occur after approval of financial statement may provide condition, it also may provide condition which is existing on balance sheet date or reporting date. One doubt will come. So why only this event? Why not this event? Understood? This doubt may come or not. So do you have the answer for this? Because already you have done AS4 and in AS4 also we have considered only this event. So why we are not considering any event which occur after approval of financial statement? What is the reason? Final. So final. But chalo theek hai. You said final. Let me ask you one more question. When I am saying date of approval of financial statement, of course you said it is final. Financial statement become finalized. Chalo, okay, I understood. But the date of approval of financial statement means which date? Whether it is the date when director approve it or whether it is the date when shareholders approve it. Directors or shareholders? Means this is the date when directors sign it or shareholders approve it. No. It is a date when director has approved it, means have signed the financial statement. But can I say once the director has approved it, can I say it will be presented to the shareholders in the annual general meeting? Means this is suppose board of directors meeting. This is board of directors meeting. So after this what will happen? AGM, annual general meeting. So suppose annual general meeting will be at this point of time. Annual general meeting will be at this point of time. And in annual general meeting, shareholders approve it. Shareholders will give their own approval now. So shareholders has given their approval because this financial statement will be presented to shareholders and shareholders will give approval. So now doubt will come, because shareholders are the owner of the company, directors are the only employee. Directors are all working on behalf of what? Shareholders. Means I am also one of the shareholders of Reliance Industries. Mukesh Ambani is working for me. Yes or no? Correct now. I am the also owner, na, small owner, but I am owner or not? Yes. My point is that if in AGM shareholders has given the approval, so why these events are not considered? Doubt may come. The reason is that I will give you the reason. Once directors approve it, then that financial statement cannot be amended. Financial statement cannot be amended because it will be submitted to all the concerned department. For example, for income tax department, ROC, etc. So once you have submitted it, now no changes. It means, can you see, you can change the financial statement only before approval by whom? By directors. So can you say on 31st March, a draft financial statement is prepared practically? This is known as draft financial statement. Draft financial statement. So first on 31st March, the accountant of that company will prepare draft financial statement, which require auditing. Then an auditor will come, will do auditing. They will give their own opinion. They will do some correction, etc. Correct. And then the audited financial statement will be submitted to directors for their approval. Then once it is approved by director, it will be signed. Once signed, then no amendment. And therefore, this become what? Event occurring after balance sheet date. Event occurring after balance sheet date. I hope you have understood. And for that reason, they have given some clarification. What are the clarification that I need to explain? First, what they have given, event after the reporting date are those events which may be favorable or unfavorable. Of course, this event can be favorable or unfavorable, and which occur between reporting date and the date when the financial statement are approved for issue. Approved for issue means what? It means it is approved by whom? Approved by board of directors. Correct. So for this, some clarification has been given on the date of approval. The first clarification, if financial statement are to be approved by shareholders after financial statement are approved by board of directors, in this case, what is the date of approval? When the financial statement is approved by shareholders or financial statement is approved by directors? Director. So one clarification has been given, if financial statement are approved for issue on the date of approval by board of directors. That only already I have informed you. Now sometime what happens, just try to understand. Sometime what happens, suppose this company has taken, means one company has taken loan from a company, as from a bank, 500 crore loan. So bank will appoint some of their officers as a non-executive director in the supervisory board of that company, because they will investigate whether there is some fraud is going or not. Correct now, because they have given 500 crore loan. So it means what happened normally, as per the requirement of bank, once the financial statement is approved by board of directors, it will be submitted to supervisory board for their approval. For their approval to investigate everything is correct or not. So in that case, the date of approval will be date of approval when it is approved by board of directors or when it is approved by supervisory board. What do you think? Understood the point? So in that case, the date of approval will be the date of approval when it is approved by board of directors or when it is approved by supervisory board. What do you think? Board of directors only. So just try to understand. Abhi right now you are in classroom, but suddenly this question comes in exam hall. Can you say you will be confused? Because that time you will think about 2 marks. It is a matter of marks now. Right now it is not a matter of marks. Whenever it is a matter of marks, you will think and you may waste your time. So every point is important. And for MCQs, these all points now become important. Chalega. So once again the same clarification, if financial statement are to be issued to the supervisory board of non-executive director for approval after management approve financial statement are approved for issue when management board of director approve financial statement. Understood? Have you understood this point? Chalega? Yes, sir. Now, one more situation. Try to understand. Now we are doing AS, Ind AS 10. Now, normally what happens? Some of the listed company prepare quarterly report. Suppose this company is preparing quarterly report. Q1, Q2, Q3, Q4. Chalega? Now, this quarterly report are prepared as per the requirement of Ind AS 34 coming soon in your life. Ind AS 34 coming soon in your life. Chalega? Means just try to understand the Q1 interim finance, we call it interim financial report. Can you say this will be approved at this point of time? Will be approved after Q1 and now. So we got approval at this point of time. Q2 approval at this point of time. Q3 approval at this point of time. And Q4 approval at this point of time. Understood? Are you able to understand what I am saying? And can you say once Q1, Q2, Q3, Q4 all information is approved, so this is available to the public. This all information available to public. Means can you say Q1 profit plus Q2 profit plus Q3 profit plus Q4 profit is known to the public due to this interim financial report? Correct. This was quarterly interim financial report. Now for annual financial statement, an annual report will be prepared and that will be approved by board of director again. So for that a board of directors meeting will be यहाँ पर. Board of directors meeting will be यहाँ पर. And they will approve what? They will approve annual financial report. Annual financial report. Are you able to understand what I am saying? The doubt came what? What is the doubt? Up to this, what was approved? Q1 plus Q2 plus Q3 plus Q4. And this profit was known. Now the question is that if you consider this as a date of approval for annual financial statement, means this event may also change the financial statement, because they may also provide condition existing on the balance sheet date. So this profit might change. Means whatever profit you have submitted in quarter report may change. The question is that whether this will be considered as event occurring after balance sheet date. Means in this case your date of approval should be this date or this date. But doubt will come now. Are you able to understand? Have you understood the case study? Not able to understand. Q1, Q2, Q3, Q4 profit is known. So that profit is now available to the public as an information. Now for annual financial report, if you consider this as what? Date of approval. So you will consider this event and that may be an adjusting event. And if adjusted, your profit may change or not. So can you change the profit by considering this as a date of approval? Or your date of approval should be this date? Understood the case study. Whatever you are thinking, give answer. What is the date of approval? Date of approval should be A or B? What do you think? A or B? B or A? B. लगा दो. अभी तो right now there is no 2 marks ना. But can you see if this type of case study will comes in exam, and if you don't know this, confusion will come or not. First, you will not be able to understand question only. First, believe me, you will not be able to understand question. Correct? You will take a lot of time to understand question only. What is this question? It is B. In every case, it is what board of director. Kasam khalo. It is the date when the board of director has approved it, approved it. Okay, all the clarification given. Now sir, why you are doing this point? Only say the board of directors. Just try to understand. If I will say only board of directors, and if I will not give you the clarification, same question will come in exam, will stuck. Now if the same question will come, you will give immediately the answer. Correct. So if the financial statement are approved by board of directors after public announcement of profit, understood, or other financial information, financial statement are approved for issue on the date of approval by board of directors. चलेगा. Okay. One more interesting point. What actually happened? समझना. Everyone. Suppose this is the reporting date, and here board of directors has done the approval. Now what happens? Sometimes due by way of articles of association, some power is given to some of the officer, yes, some of the owner of the company. Some power will be given to the owner of the company who may not be the director. They may reopen the books of account if they think some fraud is going on. Are you able to understand? So some power is given to some of the owner of the company, they can reopen the books of account. So suppose at this point of time, books were reopened. So books was reopened. So will be again, the balance sheet will be again prepared, and it will be again finalized and again approved by board of directors. So here again it is approved, board of directors. Means here it was reopened. Understood what I am saying? Correct? Not able to understand. So there are two approval dates. This is also one approval date. This is also one approval date. Two approval date given in the question now. Now for this chapter, what is the approval date? First one, second one. Apply common sense. First one, second one. First one, second one. First one, second one. You have applied common sense, and that is correct. So always apply what? Common sense. Believe me, in exam situation will come when you will become blank and nothing will come in your mind. Become see and answer it. And once you start answering it, everything will comes in your mind. Correct? This is only correct. Okay? Because already I have said it has been reopened and adjusted. How can you adjust it if this is now also what event occurring after balance sheet? If you can change the financial statement, it means adjustment required, and adjustment can be done only because of this chapter. Only because of this chapter. The one clarification has been given. Attention, if the financial statement were reopened for further adjustment subsequent to initial approval, date of approval should be taken as the date on which the financial statement are finally approved by board of directors. Can you refer this question by your own? This nothing is but depends upon this point. Means in IC also some question has been given of this nature which can be asked. Okay, sir. So done. You have understood the meaning of event after reporting date. No. After reopen, that is not the case. Just try to understand. Just try to understand. Some power has been given. There will be some power will be given to what? Special power will be given to some of the officer. Correct? So when the fraud is coming after 1 year, then it will become this now. We are reopening this. Understood? Now, if suppose some fraud came, once it is already finalized and submitted to ROC, if it is already submitted to ROC, then what adjustment? No adjustment can be done. No adjustment can be done practically. Are you getting what I am saying? So approval done, not submitted to ROC, and you investigate some fraud. You can reopen the books of account. You can reopen the books of account. Are you able to practically? After 1 year, practically this case will not come. Then in that case, such type of fraud will become prior paid item. That will be covered under Ind AS 8. So your doubt will be covered under Ind AS 8. Coming soon. Coming soon. Of course, adjustment required, but not as per this chapter, as per Ind AS 8. Hmm? No, no, just this is all legal point now. When it is submitted to ROC, go find out what is the date of submission. Okay, legal point. I am not teaching you anything legally. I am teaching you Ind AS. I am saying this is the date when the board of directors signed. When to submit ROC, just this is the legal point. What is the last date of submission that you find out from your law teacher? I am saying just try to, this is the last date to submit to ROC. Correct? Suppose. Once it is submitted to ROC, believe me, no one can change it. Once it has been given to income tax department, correct now, then who will change it? No one will change it. Then can I say, then it will be covered under Ind AS 8. That I am saying. So what I am saying, just try to understand as per Ind AS 10 requirement. Suppose this has been, the books of account has been reopened after approval of board of directors. Then again it require approval. Again it require approval. So again it require approval by board of directors only. And after this it will be submitted to whom? ROC. Understood? First it will be submitted in AGM, shareholders meeting. So normally what happens in AGM, shareholders may ask questions now, and shareholders says no, we need to reopen the books of account, you have done some fraud. So that power has been given to some of the owner. Are you able to understand now? Yes, sir. Got this point? Correct. If this situation arises, then this is the date when the financial statement is approved for this chapter. So this entire event will become event occurring after balance sheet date. Okay, sir. This is one question. Let me read that question. Come to that question only. Question 3. The board of directors of ABC Limited approved the financial statement for the reporting period 2011-12 for the issue on June 15, 2012. Question 3 we are doing. The management of ABC Limited discovered a major fraud and decided to reopen the books of account. The financial statement was subsequently approved by the board of directors on 30th June. What is the date of approval for issue as per Ind AS 10 in the given case? So it is 30th June. For issue means what? For issue to the shareholders, for issue to the ROC, etc. Now it can be given or submitted to ROC now. So here the date of approval will be June 30, 2012. Got this one? This much. This type of question can be now asking multiple choice question. Okay, sir. So we have done question number 3. Just give circle to question number 3. Now coming to types of event. Types of event, to you all know. There are 2 types of event: adjusting event, non-adjusting event. Adjusting event are those events which require adjustment. Non-adjusting event are those events which do not require any adjustment, require only disclosure. Now what are adjusting events? Which provide evidence of the condition existing on reporting date. Which provide evidence of the condition existing on reporting date. Correct. So any event which do not provide evidence of the condition existing on balance sheet date, that is not adjusting event, non-adjusting event, or we can say which relate to the condition arising after reporting date. So any event which relate to the condition arising after balance sheet date is a non-adjusting event. Non-adjusting event. Correct. Means can I say in simple word, this relate to past event and this relate to future event. Future event now, and therefore it does not require any adjustment. It does not require any adjustment. But if the amount is material, what Ind AS 10 says, then you can disclose. So disclosure of such event is required in the financial statement, that is notes to account, if the amount is material. However, our AS4 used to say that disclosure required in the report of approving authority. That was a bakwas point, has been corrected. Correct. Now what I will do, because this chapter you know, nothing to teach you from adjusting or non-adjusting point of view, but I will take 10 to 12 examples. Initially I will take the examples of CA intern, and there I will increase the level to only inform you whether you have understood this chapter or not. If you are giving correct answer, means you have understood. If you are not giving correct answer, means some correction is required. Okay sir? Okay sir? Yes sir. Let us take example. Whatever example I am taking, I will write down. So if you want to write, write. If you don't want to write, then also write. Okay sir? Chalega? Yes sir. Let us start. Example number 1. This is reporting date. This is DOA, means what? Date of approval. Correct. And these are financial year. Now what happened? There was one debtor. Can I say every faculty at CA intern level will start this chapter with an example of debtor only? Are बोलना रे? And sometimes we think this chapter is debtor only. Sometimes we think. And in exam also, most of the time the question will come for debtor only. Debtor. Now suppose there is one debtor and the amount outstanding, means amount receivable, is 10 lakh. Okay. Now what happened? After reporting date, a fire occurred Suppose the name is Mr. Ram of debtor. Fire occurred in the factory of Mr. Ram and he was declared insolvent, and now no amount is recoverable. No amount is recoverable. बताओ, adjusting, non-adjusting, adjusting, non-adjusting. What do you think? How many are saying adjusting? How many are saying non-adjusting? Non-adjusting. Everyone saying adjusting? Non-adjusting. Someone is saying non-adjusting, someone is saying adjusting, means doubt is there. Chalo. The correct answer is non-adjusting. Correct answer is non-adjusting. What was the no condition was there? He was a good debtor only. And fire occurred after reporting date. It was recoverable only. Means here, if I have means no information has been given, so what will you consider? He is a good debtor or bad debtor? Good debtor. So he was a good debtor. So if he was a good debtor, whether there was any condition existing on reporting date, there was no condition. There was no contingencies. There was no contingencies. Correct now? And therefore non-adjusting. Just try to understand. This relate to condition arising after what? Balance sheet date. After reporting date. The first example, basic example I have taken. Some of you have given wrong answer. So okay, chalega na. We are here to correct ourselves only. We are here to correct ourselves now. Means we need to change from CA intern to CA final. Okay, so one more example. Example number 2. This is reporting date. This is date of approval. Once again we have a debtor and amount outstanding was rupees 10 lakh, but this debtor was a doubtful debtor. It is given he is a doubtful debtor. Doubtful debtor means what? Suppose the credit period allowed to him was 2 months, correct? So if the credit period was 2 months and it was expired, until now he has not paid any amount, so he become doubtful. What is the difference between doubtful and bad debtor? Bad debtor means now some evidence came that he will never pay, but right now we do not have the evidence that he will not pay. Means he is saying that I will pay, but he is not paying on time. Means whenever we are calling him, he says, don't worry, I'll pay, don't worry, I'll pay, don't worry, I'll pay, but he is not paying. He become doubtful. Understood what I am saying? Chalega? Yes, sir. But there is no evidence that he will pay. Sorry, there is no evidence that he will never pay. Because if there is an evidence on 31st March, he will never pay, then we will create an 100% impairment loss. Impairment loss, what do you have understood? Now, because he was doubtful, therefore, can you say we will also recognize impairment loss to some extent? So, we have already recognized an impairment loss as per respective Ind AS. Impairment loss is nothing but this is allowance for doubtful debt. Also, we call it expected credit loss. We also call it expected credit loss. How to calculate it? This is as per Ind AS 109 coming soon. Means how to measure it? This is as per what? Ind AS 109 coming soon. Okay, sir. So as per Ind AS 109, we have created an impairment loss of 2 lakh. On which date? On 31st March in our draft balance sheet. In our draft balance sheet. Means what is the net amount coming? 8 lakh. This is our draft balance sheet. Understood? Have you understood this point? Yes, sir. Now what happened? Some information. Now we got some evidence from the market and we got the information that he was declared insolvent and no amount is recoverable. No amount is recoverable. Understood? Now say whether it is adjusting, non-adjusting. Adjusting event, non-adjusting event. Now it become adjusting event because there was a condition existing on reporting that, and this event provide evidence of the condition. So our impairment loss is not 2 lakh, our impairment loss will be 10 lakh. Understood? It means now it become adjusting event. Adjusting event. Now what is the objective of Ind AS? Let us understand what is the objective of Ind AS. What is the objective of Ind AS? Ind AS 10 says that we do lot of estimation to prepare financial statement. We are doing a lot of estimation. Provision is an estimation only. Ind AS 37. And impairment loss is also one type of estimated amount as per Ind AS 109. So it means for preparing our financial statement, we are doing a lot of estimation based on the information available as on that date. Correct? Understood? And before approval of financial statement, some event happened which provide some more reliable information about that estimation. So we should change the estimation now, because we are here to give true and fair view to the whom? True and fair view to the user of financial statement. So if before approval of financial statement you know that no amount is recoverable, so you should inform to the user of financial statement that nothing is recoverable. Means here on reporting date you are of the view that 2 lakh might be lost. But before approval of financial statement, now it is confirmed that nothing is recoverable. So in your financial statement, you should recognize entire loss. Entire loss now. Are you able to understand? Are you able to understand? Have you understood what I am saying? Are you getting what I am saying? Yes, sir. It means, just try to understand what I am saying. Means for this 2 lakh, what journal entry already you created? You have already passed one journal entry. Impairment loss, account debit. Impairment loss is nothing but bad debt. You can add on expected bad debt or what. But now we call it impairment loss. Impairment loss on debtor. Correct? To what? We will say allowance for doubtful debt. How much? This journal entry already recorded. Now you need to adjust. You need to pass one adjustment entry for adjusting event. This journal entry is already done now. Arey bolna. In your draft financial statement, this journal entry has been done or not? This is already charged to PL account. This is already charged to your PL account. Now what will be the adjustment entry that I am explaining? What will be the adjustment entry? Adjustment entry will be done on which date? On which date? On this date now? On 31st March. So suppose this is 31st March 2025. So on 31st March 2025, I am giving you two options. You will say which one is correct. I am giving you two options. You will say which one is correct. First option, impairment loss, account debit to allowance for doubtful debtor 8 lakh means it will increase your allowance from 2 lakh to 10 lakh. Second, you will do this journal entry. Second option, impairment loss 8 lakh, allowance how much already created 2 lakh, and you will decrease the amount of debtor by 10 lakh. Means you can see in this journal entry your data is not decreased, you only created an allowance. Means if this is the journal entry, then in balance sheet you will show debtor how much 10 lakh minus allowance how much 10 lakh. Ultimately it become nil, but this will be your disclosure, and in this case your data will become what? Nil. Means the total of balance sheet remains same, but presentation will be different. Are you able to understand which one is correct entry? First one, second one. First one is correct, second one is correct from your point of view. मजा आ रहा है? Understood how I am teaching? Believe me, once again, not relevant from exam point. They will never ask this type of journal entry, but as a CA you should know or not. As a chartered accountant, you should know or not? Batao, which one is correct? This is what, how can I understand? A or B bolo? First or second one? So someone is saying first one. Doubt is there, na? Chalo, just try to understand what actually happened. Let us come to the concept. We always record our transaction date wise in chronological order. Bachpan mein journal entry is done in chronological order. Here, but he debtor was a doubtful debtor or bad debtor? Doubtful. Here it become bad debtor. Means here it become bad na. Bad means confirmed that nothing is recoverable. And once it become bad debtor, then only debtor can become nil. Doubtful debtor always will recognize allowance for bad and doubtful debt. And that will be shown by way of deduction from debtor so that the user can understand that he is a doubtful debtor and this much allowance is created. So right now he is a doubtful debtor. So can you make debtor as a nil? No. It means this is only correct journal entry. You need to increase your allowance by how much? 8 lakh. You can't decrease your debtor. So this is not correct entry. You'll decrease debtor when it become what? Bad debtor. Means in the next year you need to pass journal entry for what? Bad debtor. Means you will pass one journal entry what? Allowance account debit to debtor and debtor will become nil. Debtor will become nil. So this become your adjustment entry. This become your adjustment entry. Impairment loss to allowance for doubtful debt means increase your allowance by 8 lakh. But don't decrease your debtor. Because when you are decreasing debtor, it means on reporting date, you got the news about insolvency. But you receive the news of insolvency after balance sheet date. But can you say your now estimated amount should not be 2 lakh because you got the confirmation that the loss is not 2 lakh, loss is 10 lakh. Therefore, you should create an allowance for how much? 10 lakh. Understood? Have you understood? Are you able to follow? Have you understood this point? Correct? Can we move? Example number 2. Okay? Write down everything, write down with me. I will not give extra time because this is very simple chapter. But then also I am just teaching you in a detailed way. Now I will not give time for writing. Better than you can take a printout of this PDF which will be given to you if you can't write with me. Already I said your hand, your mind, your eyes should work together. Okay? Understood this point? Can we move? Can we move? One more example. Example number 3. This is what your reporting date. This is date of approval. Again, there is a debtor. And again, he is a doubtful debtor. Amount outstanding was 10 lakh. And you have created an allowance for bad and doubtful debt 2 lakh. Understood? So it is 8 lakh. Correct? Means on reporting date, you got the news that he went to Pakistan. Now you have doubt that he will come back or not. Maybe possible or not. Everyone is not Sunny Deol. Yes or no? See, now you have a doubt whether he will come back or not. But what happened? Before approval of financial statement, he came back to India. And you receive how much? You receive 10 lakh from what? Debtor. Quite possible. Even though he was doubtful, it does not mean he will not pay. Now he has paid entire amount to you before approval of financial statement. But adjusting, non-adjusting. Adjusting, non-adjusting. बोलो. नॉन एडजस्टिंग. अरे नो रे, एडजस्टिंग इवेंट. Adjusting event. Now apply your common sense as what? Chartered accountant. Just try to understand. Already I have said what is the objective of Ind AS 10 to give true and fair information to the user of financial statement. On reporting date, you are considering it as a doubtful debt and you have created an allowance of 2 lakh. But before approval of financial statement, you have understood there is no loss. So why to show that loss to the user of financial statement? Unfair na. If you know everything is recovered, so it means estimated loss is 0. Means he was not a doubtful debtor. It provides condition, it provides evidence of the condition which exists on reporting date. Yes, there is no loss. There is no loss na. अरे बोलना रे. Correct na. Yes na. So 1 second. Now think as CA. What is correct? Don't think from AS or Ind AS point of view. Whatever you think logically, that will be your answer. Got this point? Then one more. Example number 4. This type of question they have asked many times in CA Inter. Till now they have not asked at CA final level, but from my point of view can be asked. Can be asked. First, a very simple one I will say. Once again, there is a debtor. Amount receivable is 10 lakh. Correct? Case 1. Case 1. Check received after 31st March. Correct? Of rupees 10 lakh, that is understood. Correct now. After 31st March, but before approval of financial statement, na? That is understood. But adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting. How adjusting? Means check receive after 31st March, you will pass journal entry of receive on 31st March. Wow, 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 wow. Wow, wow, wow. I am saying think from CA final student. You are thinking from CA foundation student. Check receive after 31st March and you will pass journal entry receive on 31st March. When you have done that? Adjusting. मजा आ रहा है. अरे भाई, you receive check after 31st March, so you will decrease your debtor on 31st March. Chronological order na. When you receive, then only your debtor will decrease. Adjusting means you are saying pass journal entry bank to debtor. अरे बोलना रे. Non-adjusting. नालायक. अच्छा, when I am saying नालायक, don't be, please feel bad. Okay, that is my habit. Okay, only नालायक student become CA. So I was also नालायक. Okay, understood. Any doubt? I said easy, and easy only you have done mistake. Chalo. Now I am improving the case. Now sunna, what the question came. Check dated dated 31st March or before 31st March. Understood? Means the date of check is either 31st March or before 31st March. Received after 31st March. Oh ho 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 ho. Oh ho 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 ho. Understood? अब मजा आएगा. And these are practical questions. Interview they will ask this question only. This type of question they have asked in CA Inter, but till now they have not asked at CA final because CA final they think they can answer, but I know they can't answer. बताओ. Take dated 31st March or before 31st March, received after 31st March, adjusting, non-adjusting. Adjusting, non-adjusting. Sir, this is classroom ना. Yes, no, बोल तो मजा आ रहा है. There is no fear of losing marks. But in exam तो dangerous ना. Yes, sir. How many are saying non-adjusting? How many are saying adjusting? Achha, those who are saying non-adjusting, can you explain why? If you give correct explanation, I'll give one chocolate. You are saying actually it is not received. But suppose I am your client. Suppose I am your client. I said, Sarji, date is what C. So convince me now. Understood. If you are saying it is non-adjusting and I am your client, so I will say what is the date. Normally what happens, accountant will pass journal entry as date of check. But you are not accountant, you are chartered accountant. There is difference between accountant and chartered accountant. Okay, lot of difference. Huh? So suppose I am accountant of your client. I am saying, sir, see date. What is date? Date na. So I have done journal entry as per date. And therefore, it will be recorded in this financial year. Convince me. Means you are saying you receive after 31st March. Convincing answer is not there. Means ICA will not give marks to you because this is not the best answer. Even though your answer is correct, means non-adjusting is correct. Non-adjusting answer is correct. But if you say only non-adjusting, if you are not giving convincing evidence, supporting evidence for that non-adjusting, ICA will not give marks to you because your answer might be correct but not the best answer. So can you convince me? Understand what I am saying? It is a non-adjusting event. Write down. Why? Because check is not under the control of entity on or before 31st March. Hence, it cannot be recognized as an asset. It cannot be recognized as an asset. It is not under control of entity. Whether this check can be deposited in the bank before 31st March, whether this check can be endorsed to any other party before 31st March, no. And therefore it was not under the control entity. Therefore it is not an asset of entity. If it is not an asset of entity, the question of recognition will not arise. Understood? Correct. This becomes best answer. Hence, it cannot be recognized before 31st March, on or before 31st March. Understood? Case number 2, you understood? One more case. This question also have been given in CA Inter. Have you done this type of question in CA Inter? Now what happened? Check dated 31st March or before collected by entities agent before 31st March collected by entity's agent. Entity's agent can be employee of the entity, can be any bank of the entity, can be any other party on behalf of the entity who is authorized. It can be any collecting agent. Suppose we are doing business in Hyderabad, but we have our customer in what? Any other countries or any other cities. So we have some collecting agent who will collect on our behalf. So the entity's agent has collected before 31st March, but received by entity after 31st March. Understood? Batao. Adjusting, non-adjusting. Now it become adjusting event. Because can you say once it is collected by entity's agent, it means it is collected on behalf of entity. Now it is under the control of the entity. Under the control entity which can be endorsed to any other party, which can be deposited in bank before 31st March, and therefore it become an adjusting event. Understood? Have you understood? These all are practical questions. And this type of situation will come with your clients. You will say, Nalayak, do adjusting. He will say, no, it is not adjusting. Correct it. Understood. Example number 4, you have understood. I have taken 4 examples for debtor. 4 examples for debtor. Correct? Now, let us move to some other asset. Can we move to some other asset? Bolo. Example number 5. Otherwise, you will think it is a chapter of only debtor. Example number 5. Let us come to inventory. 31st March, date of approval. There is inventory. Inventory we will apply what? Ind AS 2. Ind AS 2. The cost price was 100. NRV was 120. And therefore, you have done valuation at 100. Cost price or NRV, whichever is lower. This is the requirement of Ind AS 2. This is the requirement of Ind AS 2. Okay, sir. Okay, sir. Now, a fire occurred and inventory damaged, and now the NRV become what? 80. Batao, adjusting, non-adjusting. Adjusting, non-adjusting. Non-adjusting. Simple. This is very simple. Non-adjusting. Non-adjusting event, because this relate to the condition arising after balance sheet date, after reporting date. Understood point. This is very simple. Acha, what do you mean by NRV? Full from I am not asking. Meaning I am asking. Net realizable value, what is the meaning? It means estimated selling price minus estimated selling expense. Means at what price it can be sold by the entity. Correct now? This is also one estimated amount. This is also one estimated amount. Okay, sir. Correct. Example number 5, so I hope you understood. Example number 6. Example number 6. 31st March, date of approval, cost price 100, and suppose NRV you have estimated 120. ठीक है. But actually, now nothing, no information of fire, nothing has been given. Okay, correct. Nothing has been given. But this was actually sold at rupees 80. बताओ. Adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting, non-adjusting. Hmm. Understood CA final level? Are you able to understand? One simple chapter, कितना depth है. This is so detailed. CA inter में everything ऊपर ऊपर. Now so much detailed. You might be understanding what is the importance of Ind AS in our life. What is the importance? And being a CA, we should know these all facts. Once again, I have already said NRV means estimated selling price, at what price it can be sold. If the actual information known to you that it can be sold at rupees 80, that only become NRV. That only become NRV now. Now I am given nothing. I have not said fire occurred, nothing happened. Means can you say that it was same inventory was sold at rupees 80? It means that only become NRV on reporting. That means your estimated amount should be 80. Actual information you know. One second. It was an estimated amount. हो सकता है you have wrongly estimated it on 31st March. You don't know at what amount you can sell it. Now actual information came to you. Now that can be sold only at rupees what? 80. So this become adjusting event. I will say think like a chartered accountant. Think like a chartered accountant. So this become an adjusting event. This become an adjusting event. Okay, sir. Adjusting event. Okay. Adjusting event means what? Now it will be adjusted. It will be adjusted. So your cost price is how much? 100. Your NRV become how much? 80. So how much loss you should charge to PL account? 20. So you should write down your inventory by how much? 20. Understood? Now one question was given in ICS study matter CA final. Let me come to that question. Example number 7. What they are saying is suppose cost price is 100, NRV 120, and due to market fluctuation, something due to market fluctuation, the expected means now such inventory can be sold at rupees 80. Market fluctuation. Market fluctuation will come due to demand and supply, yeah, due to nature of the inventory. For example, we are dealing in some technological equipment. So we know that technology may change. Due to market fluctuation, the price may come down. For example, we are dealing in this mobile, a new model come, the price of the old model will decrease or not. Are you able to understand? So that is market fluctuation, due to market fluctuation. The now such inventory can be sold at rupees 80. Batao. Adjusting, non-adjusting. Adjusting, non-adjusting. Adjusting event. Anyone saying non-adjusting? No. फिर से. Don't say like this. I will not say. You have two options. Exam, do or do. Exam, only one rule is that you need to attempt 100 marks paper. I said in my first class, you should have right attitude. Right attitude means you should give answer as if you know everything. Then only you can complete your paper in exam hall. First, you should have that intention to complete. Then only think in a positive way. Yes, I know, and my answer is correct. Now let them decide whether your answer is correct or not. Why you are deciding? Whatever you understood, apply your common sense based on that and answer it. Okay, now, bolo. And just try to understand. Here you are giving wrong answer. So whether I am scolding you, I am not scolding you. Whether I am saying go out of my class, no. Whether I am saying you are punished, no. And we learn from our mistakes. If you do mistake, then only you'll understand. Acha, I am doing mistake. Let us correct it. Let us correct it. And you'll think on a right way. Do it. Bolo. Adjusting, non-adjusting, non-adjusting. So this is adjusting event. Adjusting event. Acha, those who have said adjusting event, can you explain why? 100% just try to understand. Any businessman knows about the market. The condition will prevail on 31st March. If you don't know about market, means you are not a businessman. Yes or no? If suppose I am dealing in this mobile, so I know what will be the market condition. And if you don't know about market condition, you are not a businessman. So due to market fluctuation, it came down. So that information, that condition was available on 31st March. Yes or no? And therefore, this market fluctuation will be always considered as adjusting event for inventory. Understood? Have you understood? Same question has been given in ICS study matter. One of the good question. I think question number is there. If you want, I can read it also. Can I read it? चलो देख लेते हैं. That question I have given in Ind AS 2. Ind AS 2 because inventory related ना. चलो ठीक है. Ind AS 2 में देख लेंगे. But have you understood or not? Okay, sir. Yes, sir. Means Ind AS 2 I will do again that question. Now don't give me wrong answer. Huh? Now if you are giving wrong answer means game is over. Now you have understood. If you have any doubt, ask me right now only. If you want to fight with me, fight right now. Once again I said don't accept it till you understood anything. Okay. Now example number 8. Suppose you have purchased one investment in equity shares of some company. Investment in equity shares of Reliance Industry Limited. Correct? Understood? And the cost price was 100. अच्छा 1000 कर लो. 1000 of one equity shares. And the market price, or you can say fair value, as on 31st March is 900. Okay. Now, there is one chapter in Ind AS 109 coming soon in life. It says it will be recognized at fair value, this market price, as on reporting date. As on reporting date. Correct. So, as per Ind AS 109, first I need to explain as per Ind AS 109, na? Correct. As per Ind AS 109, it will be recognized at fair value on reporting date. Okay, correct. Now what happened before approval of financial statement? The market price again came down to what? 850. But the adjusting, non-adjusting. Adjusting, non-adjusting. अरे बोलो, don't, you have two options, adjusting, non-adjusting. Whatever is coming in your mind, speak it. How many are saying adjusting? How many are saying non-adjusting? So non-adjusting is correct. Till you become expert, I'll give example, I'll try to kill you. Perfection नहीं आया. अरे नालायक, अभी right now I have said as on reporting date. Means subsequent changes not relevant. Now subsequent changes, here देखो, here it was NRV. NRV, what is the meaning? What is the meaning of NRV? NRV means estimated selling price. At what price it can be sold in future. But here what is the measurement principle? Fair value on reporting date. Means subsequent changes is not relevant. Now it become non-adjusting event. Yes or no? Here what I have given? As on reporting date. The subsequent changes relate to the condition after balance sheet date. Na? Inventory was at NRB. NRB means estimated selling price. At what price it can be sold? It can be sold before approval of financial statement. That information means any information was sold before approval of financial statement provide evidence of the condition existing on the balance sheet date. But here it is not subsequent market price. It is which market price? On reporting date, and therefore non-adjusting event. Understood? अभी तो मजा आएगा. Example number 9. Let us introduce PP in your life. PP means property, plant and equipment. Okay. 31st March, date of approval. Now, property, plant and equipment. Correct. Suppose the book value you know, after depreciation. ऐसे लिख देते हैं. Cost price is equal to 10 lakh less accumulated depreciation. AD means accumulated depreciation is 2 lakh and is coming in the balance sheet at rupees 8 lakh. ठीक है? Understood? You know AS10. AS10 you know ना? ठीक है. We have two model, cost model, revaluation model. Let's say we are applying cost model, we are not applying revaluation model. Right now I will not ask any question on revaluation model because revaluation model I will teach in Ind AS 16. This is nothing but cost model. Correct now? Now, entity has sold such machinery means PP at rupees 7 lakh. What is the loss? Loss is what? 1 lakh. But adjusting, non-adjusting? Non-adjusting. Non-adjusting. Confidence is coming. Confidence is coming. Chalo, non-adjusting. Sir, why adjusting? Non-adjusting. Non-adjusting na? Non, 100% correct. Non-adjusting. I will now confuse you. Be ready. Are you ready? Now I'll confuse you. Okay, sir. मजा तो तभी है ना if I'll confuse you. Yes or no? Are you getting interest or not? Believe me, if I'll say this now, you'll think, "Arey sir," and I will read this example, you will be able to understand. "Arey sir, मजा आ रहा है sir." "Hey sir, हो गया." Other teacher will teach this chapter only in 25 minutes, 30 minutes, half an hour. And I know the importance of this chapter from examination point of from practical point of view. Examination point of view, okay. There are some questions given, you can read it, you can understand it, because a CA final student can understand any solution. But when I'm asking you without solution, you think, and I want to develop your mind. You don't have solution, you have to answer it. That is the ultimate check, na? If you have the solution, okay sir, I know everything. Okay sir. Example number 10. 31st March, date of approval. Same thing. We were having a machinery PP of rupees 10 lakh and accumulated depreciation 2 lakh, 8 lakh. But what happened? Before 31st March, there was a proposal to sell machinery to X Limited at rupees 7 lakh. Means we are negotiating. A proposal is there. Yes or no? Are you able to understand what I am saying? Before 31st March. And now actually sold. To X Limited at rupees 7 lakh. Batao, adjusting, non-adjusting? Adjusting, non-adjusting? Adjusting, non-adjusting? Non-adjusting. It will be non-adjusting. And Nalayak, PP will be always valued at cost model. It is not cost price or NRB which is lower. Why you want NRB? Whether there was any agreement to sell, whether the control of the goods has been transferred. If you know AS10 says ki the PP will de-recognize only when the control of that goods control of that asset has been transferred to the other party. Here so it is with them. Control will transfer at this point of time. When actual sale happened, it is non-adjusting event, and we never measure at cost price or NRB which is lower. For inventories is NRB. Here the cost model now. This is nothing but cost model. So you will de-recognize, means you recognize the loss only on actual sale. Are you able to understand what I am saying? So just write down non-adjusting event. But just try to understand. This one Ind AS 105. Just write down यहाँ पर refer Ind AS 105. अभी I am assuming that Ind AS 105 is not applicable. Because if Ind AS 105 is applicable, which is for non-current asset held for disposal, then your entire measurement principle will change. I mean, what is Ind AS 105 coming soon in your life? So I am assuming that Ind AS 105 is not applicable. Ind AS 105 will discuss under Ind AS 105. That time I will once again come to this example. It is quite possible on the date of proposal Ind AS 105 is attracted. So your measurement principle of PP will change. What will be the changes we'll discuss where? Ind AS 105. So just write down for your understanding, because what will happen if you'll do this example, that time if you have done Ind AS 105, one doubt will come. So what about Ind AS 105? So already I have written, refer Ind AS 105, assuming that Ind AS 105 is not applicable right now. Understood? Non-adjusting, but there was no condition of sale. Where there was a condition of sale, control was not transferred. It is a condition arising after balance sheet date. Control was transferred after balance sheet date. You will de-recognize after balance sheet date. Okay, na? Now, this is one bakwas question of CA Inter. Normally, in CA Inter, ICA used to ask that bakwas question in AS4, but from my point of view, that is not a question of AS4. But in CA Inter, I also teach from the point of view of ICI. But now let me explain that point, because if I will not do that question, you will not be able to understand the actual concept. Example number 11. Try to understand this question. Huh? And I hope you have done this type of question in CA Inter, because this is very popular question of CA Inter. What they will say? There was an agreement to sell PP before 31st March. Suppose the carrying amount of PP is 10 lakh and sale price is 8 lakh. Already agreed. And sale registration was completed before what? Before approval of financial statement? Yes or no? Everyone will say it is an adjusting event. Non-adjusting, adjusting. You remember this type of questions? The agreement to sell PP carrying amount 10 lakh, sale price 8 lakh, and registration of sale was completed. Sale registration means suppose it is a land. So in case of land, we need to do registration, means the transfer of name from one party to another party. So registration is completed before approval of financial statement. So it is an adjusting, non-adjusting, adjusting event. But from my, means as per CA Inter point of view, they ask this question at what? AS4, and they have given yes, it is an adjusting event because registration completed before 31st March, before approval of financial statement, which gives evidence of the condition existing on balance sheet. Bakwas, totally bakwas. I also teach in CA Inter same thing, because they want same solution. But just try to understand, once sale agreement is completed, control transferred or not? Are a sale agreement completed, registration is a mere formality. Registration is a mere formality. Can you say we need to apply substance of a form? Once sale agreement completed, the control transferred, even though registration is not completed, we need to apply Ind AS 16 with AS 10, and the control transfer, it will de-recognize. So can you say actually this is not a question of what? Ind AS 10. Sale registration was completed. This is only a legal formalities which will not be considered for accounting treatment. Are you getting? Are you able to understand what I am saying? So sale registration was completed. Can you say this is only a legal formality as per substance over form such registration is not required for recognition of transaction. Yes or no? Means can I say once agreement to sale is done, and can I say control is transferred? And once control is transferred, sale will be recognized. Yes or no? Even if what? Even if registration is not completed. registration is not completed or completed after approval of financial statement? Yes or no? Means even though registration was completed after approval of financial statement, then also we'll recognize sale in this financial year. So from my point of view, this is not a question of Ind AS 10, it is a question of actually Ind AS 16. So now if these questions come, you need to answer as a CA final student now. You will say why this is bakwas, registration will not take care. We'll say agreement done, so of course control transfer. Agreement done, control not transferred, then we'll not recognize it. Even though registration is completed before approval of financial statement. Because we need to see on 31st March who is controlling this asset. Have you understood? Are we able to follow this? Have you understood this particular point? As per CA inter, we used to say AS4, adjusting event. But as per CA final, you say the question of adjusting event, non-adjusting event will not arise. Control transferred before 31st March. Recognize it. Control does not transfer before 31st March. Do not recognize it. Simple word na. Understood this point? Any doubt? Got this point? So I have taken one example of debtor, some example of debtor, then some example for inventory, then some example of investment, then some example of PP. Correct now? Means I am taking all types of examples. One more example. Example number 12. Suppose on 31st March, a legal case is pending. Now I am just linking this chapter with AS 29. Sorry, Ind AS 37. AS 29 to CA inter na. Legal case is pending and all the condition is satisfied, and you have recognized a provision. Already you have recognized a provision of 10 lakh. You have recognized a provision of 10 lakh. Okay. Now what happened? Before approval of financial statement, court judgment came. Court judgment came. Understood? Means decision was taken, case was decided, and it was against the company. It was against the company. This is case 1. Against the company. And amount payable is 15 lakh. Batao, adjusting, non-adjusting? Adjusting. Adjusting na? So you will adjust 10 lakh to what? Means you will increase the amount of provision to what? 15 lakh. You will increase the amount from 10 lakh to 15 lakh. This is adjusting event. Simple. If I say case number 2, the decision came in favor of company. Quite possible. And no compensation payable. No compensation payable now. Batao. Adjusting, non-adjusting? Adjusting, non-adjusting? Adjusting. Now you reverse the entire amount of provision. Adjusting. But a simple na re. Now you are giving all correct answer. Okay. Dire dire dire. You will be able to understand whatever I am saying. Chalo. Last example I will take for today, but final level. Let's see how you are reacting. Okay. Now means you have done this much now. Now there are many questions given in ICS study matter, means in my question bank, that you will do. So more understanding will come. Are you able to understand? I will give you some questions that you need to do by your own. So last example for today, example number 30. We have done restructuring right now. Restructuring as per Ind AS 37. Now what happened? Entity has decided to close down their one factory. Okay? At this point of time, detailed plan was made. This is 31st March. And at this point of time, they announced the plan to those who are affected by it. Correct now? And this is the date of approval. Understood the question? Question you understood? So we discuss under restructuring as per Ind AS 37, if two conditions satisfy, there is a constructive obligation. What are two conditions? Detailed formal plan has been made, or and entity has started to implement such plan, or has made announcement of such plan. So both the condition I have given, but the adjusting. So you can see announcement came after 31st March, but before approval of financial statement. And second, think and say. Most of the time, if you react immediately, you'll give wrong answer. Think and say adjusting, non-adjusting, because I want correct answer. Adjusting, non-adjusting. Adjusting. Adjusting event means one thing is clear that maja nahi aa raha. If you are saying adjusting event, everything wasted. It is a non-adjusting event. But nothing to fear, huh? Nothing to fear. The more we'll do mistake, more understanding will come. I always say this. Okay. ठीक है ना? Okay, right now we are doing mistake, but in exam we will not do mistake now. Non-adjusting event, but just try to understand. Both the conditions need to be satisfied on which date? 31st March. So this condition, constructive obligation, arises after 31st March or before 31st March? After 31st March means this condition relate, the event relate to the condition arising after 31st March now. So of course this is an event, but relate to the condition. Here there is a constructive obligation. Constructive obligation arises at this point of time. Yes or no? So on reporting date there must be constructive obligation, but there was no constructive obligation on 31st March. So there was a condition which arises after 31st March, and therefore it is a non-adjusting event. This is a very good question, will be asked in exam, already asked in exam. This is CA final level example. Understood? Have you understood? Have you understood? So I have taken how many examples? 13 example. One or two example I may take. Till one last example I'll take. So all basic example completed from my point of view. Okay. Then tomorrow there are 3 special topic. I will say 3 plus 1, 4 special topic that will do tomorrow. Second, एक last example, example number 14. This is a practical example, practical scenario. Normally it will come in your practical audit whenever you do. 31st March, date of approval. Apply your common sense. One second. Okay. There was one supplier, means you can say there is a creditor, amount due was 10 lakh, and before 31st March, on or 31st March, you have issued, means entity has issued a check of rupees 10 lakh. It means KNC will pass one journal entry on 31st March. What journal entry? Creditor account debit to? Creditor account debit to bank. Creditor account debit to bank. Even though this check was not presented by supplier in the bank, means even though your bank balance is not decreased by 10 lakh. And because of that is then you prepare bank reconciliation statement. Yes or no? This to you know na. It is quite possible supplier has not presented this check in the bank, therefore the bank balance is what right now not decreased by 10 lakh. Understood? But you will pass this journal entry or not? Means you decrease your liability and your creditor will now become nil. Your creditor will now become nil. What happened? Before approval financial statement, this check was dishonored. Rare situation, rare, very rare situation. ठीक है ना? Because dishonor is one type of crime. Okay, ठीक है? तो check dishonor. Before approval of finances. Why it is dishonor? Because the entity has not maintained the sufficient bank balance. But the adjusting, non-adjusting. Means when you are saying non-adjusting, means you are passing dishonor and journal entry after 31st March. What is the dishonor journal entry? Reverse the entry. Dishonor journal entry means reverse the journal entry. Bank to creditor. Dishonor means what? Reverse the entry na? When you are saying non-adjusting, it means you are passing dishonor journal entry but after 31st March. Means the next financial year. When you are saying adjusting, then you are passing dishonor entry on 31st March. Means you are reversing the journal entry on 31st March. Are you able to follow me? Correct. So adjusting means reverse entry on 31st March. Non-adjusting means reverse it, but after 31st March. Of course, dishonor entry will do in the next financial year, but adjusting means in current financial year. बताओ, adjusting, non-adjusting. Think like an auditor, think like a chartered accountant. Don't think like a CA inter student. But धीरे धीरे I will change you, don't worry. Adjusting, non-adjusting. Just try to understand if this is the case, if you are saying non-adjusting event, so every entity will do this. Just try to understand, they will try to disclose more liability or less liability in the balance sheet. Less liability means good company. So they will say what, Acha, you should check, then reverse it after balance sheet date. And just try to understand, it was the duty of the management to maintain the sufficient balance. And if that balance was not maintained, so they were responsible for that. Means the information, condition was available that should maintain sufficient balance on 31st March. Yes or no? Are bolna re. Means once you have decreased 10 lakh, means 10 lakhs will be kept in bank account for that creditor or not. If you are not maintaining 10 lakh for that creditor, it means the condition was there to maintain, but you are not maintaining, it become an adjusting event or not. And therefore reverse the journal entry on this date, on 31st March. And your liability should come how much? 10 lakh. Understood? Therefore it is an adjusting event. This type of question they will never ask in exam, but can be asked in interview, can this type of situation will come in your practical life. So as a CA you will say, array adjusting event. Got this point? Similar situation, once the check dishonor you understood. You know about that check is valid for 3 months. If it is not presented in the bank for 3 months, within 3 months, it will become tail and it will become invalid. So suppose if I give this situation, The check was not presented in 3 months and the check becomes stale as per RBI guidelines. Means check become invalid. So the creditor will once again come and we will reissue a new check. Will not say that will not reissue, will reissue a new check to him. But this is adjusting, non-adjusting. It is non-adjusting event. It is a non-adjusting event. Even though you are reissuing a new check, it is a non-adjusting event. Difference you understood? Check dishonor and the check becoming stale. If you want to write down. I am not writing because I know this type of question they will never ask in exam. But this is all a practical scenario example. And I am giving this example because I have done a lot of audit. I have a practical exposure. This chapter is very, very important from practical point of view. Examination depend upon question whether they are asking question or not. Whether they are asking question or not. Okay, sir. We have done a lot of examples. Chalo, एक बार fast say I will read types of event we have done, examples of adjusting event. Let's see whether we have covered most of the examples or not. The settlement of a court case after reporting date. I have taken one example. The bankruptcy of a customer that occur after reporting date. I have taken example. The sale of inventory after reporting period may give evidence about NRV at the end of reporting. I have taken one example. The determination after reporting period amount of profit sharing of bonus payment. Can I say any bonus payment depends upon profit and profit is known before approval of financial statement only. This will be also adjusting event. The discovery of fraud or error that shows that financial statement are incorrect. Of course, any fraud or any error which is coming before approval of financial statement, that will be adjustment. That is for that only we are doing audit. So any error before approval of financial statement require rectification. That is nothing but adjustment entry now. Correct? Yes, sir. The determination after reporting period of the cost of the asset purchase or the proceed from the asset sold. The determination after reporting period of the cost of the asset purchase or the proceed from the asset sold before the end of reporting period. This I will explain tomorrow. One example I will explain tomorrow. I hope you have not understood. You have not understood now? I'll explain tomorrow. Examples of non-adjusting event. Decline in the market value of investment. I have taken this question. Decline in the market value of investment. One question I have taken now. Major business combination. Any business combination is amalgamation after balance date will be always what? Non-adjusting event. Because agreement of amalgamation after balance date. Yes, sir. Announcement of a plan to discontinue operation. I have taken this question. Major purchase of the asset. If you are purchasing any asset after reporting date, that is a non-adjusting event, even though my major purchase. Correct? So this will be always non-adjusting event. Classification of non-current asset held for sale after reporting date. This I don't refer Ind AS 105. This I will explain when I will do Ind AS 105. Already I have said now. Ind AS 105. So this point I will automatically, this point will be covered when I will do Ind AS 105. Changes in foreign exchange rate. Means if there is a changes in foreign exchange rate, of course this is subsequent to reporting date. This relate to the condition arising after balance date. That will become a non-adjusting event. Major litigation after reporting date. Some legal case was filed against the company after reporting date. That is what? Non-adjusting event. Settlement of court case after reporting date before approval of financial statement is adjusting event. But any legal case filed after 31st March, that is what? Non-adjusting event. Correct? So only point number F I will explain. I think point number F you have not understood. That I will explain tomorrow. Apart from this, I think most of this all examples is given under Ind AS 10 only. And normally questions come from this. All I have explained. There are now 4 special points that we'll discuss. 3 special points and 1 special topic. So 4 topic I will say that we'll discuss tomorrow. So this chapter also more or less so completed, only 4 special points are left. Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.